talk more about markets and more specifically interest rates. Joining us now, Komal Sri-Kumar, who's the president of Sri-Kumar Global Strategies. Things happen quickly. When were you last on? All this stuff happened since the last time you were on, Sri. I'm talking about all this stuff with Signature, First Republic, Silicon Valley Bank. Has any of that stuff changed where you think interest rates are headed, or the dynamic of the whole future of what the Fed does?
Good morning, Joe. Good to be back with you again. Yes, lots of things have happened very quickly, but the overall scenario remains exactly like I have been anticipating, with the Fed's excessive easing of 2021 with an excessive tightening in 2022. I've been saying to you it will lead to a credit event and it will cause the Fed to pivot. So I think the Fed is now going to pivot, which is no different from before. And therefore, the trajectory of interest rates is also going to change. I am anticipating that the 10-year is now going to go to 3% and go lower. The 2%, the 2-year, which is just over 4%, will also go down below. And what we are looking at is, even though futures today are showing positive movement because the interest rates are lower, they are not going to like the reason for which interest rates are going lower, which is that the recession is made even more probable by what is happening in the banking crisis. And the banking crisis is by no means resolved. So it's still going on. So the question is, when will the recession begin, not if?
When will the recession hit, in your view? Will it be, how would you characterize it, moderate, bad, or a soft landing to some extent? And when do you expect the Fed to finally realize that maybe it needs to cut, or will it realize that?
Your first question first. I think the recession sets in the third quarter of this year, sometime between July and September. When does the Fed cut? Not immediately, because the inflation number, the Fed's favorite index, coming out later this week, is going to remain elevated. So there will be pressure on Chairman Powell to continue to have a high interest rate. So I expect a 25 basis point increase again. And thereafter, my anticipation is they will say that they are pausing, and it's just a euphemistic term for saying we are about to pivot. And so second half of the year, I would look for at least 2 rate cuts before we reach January of 2024. And in terms of what that does, I don't think it's going to help the economy very much. The problem is there may be more credit events to follow.
If they go up another 25 basis points and the 10-year and the 2-year do what you said they're going to do, they're going to be so far off from where the Fed is and from where the markets are. That's going to be apparent to everyone.
It is going to be apparent to everyone, except for those who think that the Fed can somehow engineer a soft landing. That takes me to the other question. I think more and more it looks like a hard landing. It would have been a soft landing had the recession occurred a year ago, but it did not. We had much higher interest rates. Now we have a banking crisis, very likely a credit crunch following. All of those say to me that the recession is going to be severe rather than slight. As you know, I was never a fan of the no landing scenario. I think it was a fairy tale. Now I think hard landing becomes even more of a reality than before, Joe.